Spencer, what's your take on how when you should stop applying for cards if you're going for a mortgage?
Oh, probably a year prior.
A year? Oh my gosh.
Yeah.
I'm living life on the edge over here.
You'll be fine. Like, it's just like your mortgage broker might be like, what's up with these like 20 credit card applications you did in the last year? It's just, the more like cooling down time that you have, because I can't remember. I think soft credit checks take like soft credit check time.
Is it 3 months or longer? Or?
Yeah, 1 to 2 years, I think, for a soft. And then,
for a soft.
Yeah, hard is 12 months. Yeah.
Okay.
But they can remain on your report for 2 years.
I did.
So I would say, go ahead.
Well, I was going to say I didn't mean to, but I had applied for a card like a month before, because we just didn't know that we were gonna like it all happened faster, about 6 months faster than we thought we would. Anyway, our lender had told us as long as you have a 750 credit score or higher, he was like, it truly doesn't matter. He was like, if you are opening a card that it could change that, then then don't mess with it. But he was like, where you are, like, it's not going to change that. So anyway, I just always, because some people in our group are very much like, you need to give it like at least 6 months. And yeah, so I was just curious what your thoughts were.
I mean, with all this stuff, like you could probably make the justification that like you're going to get more value out of opening another Amex Platinum card than you are out of saving, like half a point on your mortgage, so yeah, like you said, like if you're above 750, like excellent is excellent, so it's not like,
yeah, we only had to fill out a form. I had to fill out a form that said, why did I open a new line? And I just said for travel rewards, and they said that was all that they needed or whatever for the underwriter to look at it. But so I have always been a little like, maybe 3 months, but other people are way more conservative. So I like to poll people.
Yeah. I would say a year would be my, like, if I could, talk to somebody ahead of time, right? If they're like, hey, we're looking at buying in the next like 1 to 2 years, I'd be like, okay, great. Like, stop applying for credit cards now. But that's assuming that like they have the Amex Platinum, they have the Chase Sapphire Reserve. If they don't have those cards, then it's like, okay, you're kind of sleeping on those. So go get those cards and then buy a house later. So, cards before houses. All right, let's talk about military spouse credit scores 101. So I'm going to start off with just a quick introduction about who I am, who you're talking to today, who you're looking at. Thank you to the military travelers, by the way, for inviting me to this. Lisa, Taryn, and Amy. You got everybody's name, I think. Yep. So thank you, ladies, so much for inviting me to this. I'm excited to talk about this. It is kind of what I do for work now. As I get to talk about military credit cards and all the military benefits that we have on credit cards. And today, specifically, we're going to talk about credit scores. But if there's other questions out there that come up, if people want to, talk about like optimal order, or, talk about anything else in kind of like the military credit card space, I am happy to be a resource for that. So I started my website in 2012. I wrote 500 articles on there before turning into a book in 2021. And then I started a podcast to promote the book. There's me and ROTC, $60,000 in student loan debt. I don't know why I'm smiling. And I don't know why I'm so grumpy in the other photo. I guess official photos, you're not supposed to smile or something. But paid off all my credit card debt. This was about the time that I discovered military travel hacking. So I probably had, 10 or 15 credit cards by this point. So I should be smiling a lot wider because all the annual fees were waived on them. And what else? Well on my way to financial independence in that photo. So I was active duty Air Force for 12 years from 2010 to 2022. Actually, technically, I was 6 days short of 12 years. So for those, when somebody once called me out about that. So 11 years, 11 months, and 25 days. And we got to fly the T6 Texan, the T1 Jayhawk, and then eventually the C-17. Sorry for those who don't care about airplanes, but I was a pilot in a former life, and there's me on my final flight in the Air Force. So while I was doing that, like I said, I started the website, wrote the book. There's some of my fans out in Kuwait with the book. There's the book in the C-17 cockpit, and there's the podcast. This screenshot is very old. We now have over 212 episodes, and we're I think we're one review short of 500 5-star reviews. So if you're on Spotify, Apple, or Audible, go leave us a 5-star review, please, because we're one review short of 500 5-star reviews. I'm very excited about that. Okay, credit scores. Everybody has an opinion, has talked to their uncle, has talked to their aunt, who says, oh, you got to do this to build up your credit score. Oh, you got to do that. And it's like almost all made up. It's all hearsay. When it actually comes to like what improves your credit score, it's very simple. And like, I just went to FICO's website and just pulled this off their website. Like they're literally telling us how to play the game, and yet people are making this way more complicated than it has to be. So let's break it down. The biggest component of your credit score, and I guess maybe I should back up and just say, what are the like ranges of credit scores? So the credit, so FICO, Vantage, there's a whole bunch of other, different flavors of scores out there, but usually it goes from 300 to 850, kind of like the SAT. I don't know if you took that when you had to get into college or you applied to college. With anything over 740, 750 being very good, anything above 800 being exceptional. Usually you don't see any difference in the lending products available to somebody who's 740, 750 and above. So there's no like secret, 800, 850 FICO score club that you get invited to when you break into the perfect scores. And when you're kind of down in this like middling range, like the fair and good, it just means that there's something in your credit report, your credit history that isn't, calculating correctly. And anything below 580 is considered poor. So I personally, my entire life, I've been up in that 740 or maybe probably the 670. I don't know. When I was a college student, I wasn't really paying attention that much, but ever since I joined active duty, I've been up in this like 740 plus range, sometimes up in the 800s. But usually, I'm actually using my credit score to benefit myself. I'm not treating it like this like magical thing that you have to like feed and take care of like a Tamagotchi. It just like, I hate how obsessed people become about credit scores. I would for all the energy you put into credit scores, you should be putting in 10 times as much energy into your net worth score, because that's what actually matters when it comes to financial independence, when it comes to investing into money, into building wealth. Your credit score, like the credit score, who cares? Do you think Elon Musk cares about his credit score? No. So, there's a lot of things that we shouldn't learn from Elon Musk, but credit score is definitely one of them. You don't need to worry about your credit score too much, other than you want enough credit score so that you can have access to the best military credit cards. So that's kind of the range right there. Now, what makes up a credit score? There's 5 things. It's not like, is it a full moon? Did you sacrifice a cat to JP Morgan Chase? No, like there's 5 things that make up a credit score. They're very simple. And the things that you can do to actually move the needle on them are also very simple. So number 1, the biggest thing is payment history. Do you pay your bills on time? I mean, this is mind blowing to a lot of people, but that's it. Like, that's what the credit card companies, that's what lenders care about. Are you a person who can set a reminder in your phone or can set up Autopay so that the money comes from your checking account and goes to your credit card or goes to your student loans or goes to your auto loan or goes to your mortgage? That's it. That's all they care about. Well, not all they care about, but 35% what they care about. The biggest chunk is payment history. And so what can you do as a consumer is you can pay on time every time and set up Autopay so you never miss a payment. That's about it. And if you've missed a payment in the past, so like one time I missed a payment on my wife's credit card, and then I missed the reminder because the emails were going to her, the emails weren't coming to me, and eventually we got hit with a late fee. Okay, this was the only time I've ever missed a payment on a credit card, and I was so embarrassed. But what did I do? I just called Chase and I said, "Hey, I screwed up. I missed the reminder email. Do you mind waiving the late fee?" And they said, "Yep, that's no problem." They waived the late fee. I paid off the bill. Done. Banks and credit card companies are seen as these like boogeymen, but there's just people behind them in the end of the day. And a lot of times they have policies in place where if you just ask, they can forgive like one-time infractions or one-time problems. Now, if you have like a history of like never paying your bills on time, they're probably going to be a lot less generous about that. But for the average military credit user, military consumer, just call the bank, just call the credit card company. If you mess up, it's okay. And then what did I do as soon as I realized that card hadn't been paid? I set up Autopay. I went through all my accounts, double checked all my Autopay settings, made sure that it was statement balance in full as soon as the statement closed. And it was coming from the right checking account. And I made sure all the email addresses were coming to me because I'm the manager of the credit in the family, not my wife. So payment history, 35%. Pay on time every time and set up Autopay so you never miss a payment. What I used to do is I used to make my payments before the Autopay would kick in because I wanted to control how much was going out of my checking account. Now I just have it set up so that it just comes out. I just leave a little bit extra in my checking account and it just comes out automatically. So that's payment history, 35%. Amounts owed and utilization. So this is if you have, $100,000 of available credit on your credit cards, keep it below 30%. So keep it below $30,000. This is going to kind of go up and down like as your statements close, right? So the other day, I had a big purchase on one of my credit cards. The statement closed with a $15,000 balance on it, right? So boom, all of a sudden my credit utilization shot up. My credit score dropped a couple points. I paid off that statement in full. And then the next time the statement closed, it was like $5,000. And so my credit utilization dropped and my credit score went up like 5 or 8 points or whatever it was. Not a big deal. And the biggest thing you can do here is just keep your credit utilization. So that's the amount of credit that you have available. So you add up all your credit cards, add up all your, your mortgage, your student loans, your auto loans, and then how much of that are you using? Are you utilizing? For most military families, they might have 10, 20, 30, maybe even sometimes $50,000. I think at some points, I've seen people with like $250,000 of available credit just because they have so many credit cards open. And you just want to make sure that you keep your balances below 10%. So this is one of the fastest levers you can pull to juice your credit score if you need to or want to. You can pay off your statements. You pay off your credit cards before the statement closes. So then the statement will close with a zero balance, and then it'll show that you have less amount owed and less utilization. And that's 30% of your credit score. So we just talked about 65% of your credit score. So if you don't have Autopay set up, if you're missing payments and you're using too much of your available credit, you can't expect your credit score to be high because 65% of your credit score is made up of those things. Okay, the next one is length of credit history. So again, this is like when we're talking about what it takes to have a good credit score, some of it is just time. It's just out of your control. You just need to wait. So if you just immigrated to the United States, for instance, and you don't have a credit score, you need to establish a line of credit so that you have a bank or a financial institution start reporting to the credit bureaus, which are Experian, TransUnion, and Equifax. And you just need to keep your oldest line of credit open. So for most people, I recommend a no annual fee credit card. So like for me, I have a Chase Freedom Flex or Unlimited. I can't remember which one. It was open in like 2010, 2011. And I am stuck with that card for life. I'm never going to close that card because that is my oldest line of credit and is aging all my other all the rest of my credit history, right? So that's the length of the credit history. And your action step there is just keep your oldest card open. It's very simple. but you see people make the mistake all the time where they close their oldest credit line. Now, I will caveat that though. Like, let's say that you open up an Amex Platinum card, and that is your first credit card, and let's say you open it before, if you're a military spouse, before you got married to a military service member, before you were eligible for MLA or SCRA, I would say don't pay a $900 annual fee to keep your oldest card open. That's the other thing here too, is like you get people who get so twisted and they think they have to start like taking on debt to like juice up their credit score. No, don't do that. You're not going to get any, like, there's no benefit, right? Once you're from a lender, like once your credit score is excellent, like 740, there's no benefit to getting it higher. You're not going to get lower interest rates. You're not going to get preferential treatment. There's no 850 credit score club at the airport that you can get access to. So again, for the length of your credit history, just keep your oldest card open unless it has an annual fee on it. Then you might want to look at, hey, closing that line and then opening a no annual fee card, and then that becomes your new oldest card. Okay, so that's 80% right there. Payment history, auto pay, amounts owed. Just you can pay your cards off before the statement closes, and length of credit history, 15%. So we got 10% left. That's credit mix. So there is a slight advantage to having different types of cards, credit types. So whether it's credit cards, like auto loans, mortgages, student loans, having all those kinds of different like flavors of credit on your credit report does help slightly, but it's not that important. Like I knew somebody who was delaying paying off their student loans because they wanted it to increase their credit score. And so they were paying more interest to have a higher credit score. And like, that is just such a perversion of the system. Like that is not what you're supposed to be doing. You're supposed to be paying off your debt so that you can start investing and building a net worth. You're not like, I guess if you gamify anything like a credit score, then people get confused and they think that they're trying to maximize that. But that's not what this is for. A credit score is just there so that you can go get lines of credit. That's it. And then new credit. So hard inquiries matter less than people think. Especially if you get multiple mortgage or auto inquiries in like a 2 to 6 week period. A lot of those are lumped into a single inquiry. You might see your credit score drop, 10 points, 15 points overnight. If you do, like let's say you apply for like a Chase Sapphire Reserve and you had like a, 800 credit score, boom, you check this credit score the next day. Oh my gosh, 790. It's okay. Don't worry. It'll bounce back. Give it 6 months. It's not a big deal. Again, as long as you're staying above that like 740 range, it's not a big deal. Okay, before I move off this slide, are there any questions in the chat or anything?
I have one.
Yeah, good.
Okay, so you talked about how you can pay off your statement before, pay off the balance before the statement closes, so it gets reported to the credit bureau as, no statement.
Yep.
But for Citi, I have seen that sometimes they're a little weird about like you actually having a balance. Can you talk a little bit about that to make sure that the annual fee is waived for Citi cards?
Oh yeah. Okay. So yeah, that's getting super technical. Okay.
I know. Sorry, but I just because you
No.
said that, I was like, I don't want people to then not do that on that one card. I don't know.
Yeah. So actually, from the latest data points I've seen, Citi does not require that anymore.
Okay.
Let me just triple check that. Citi. Sorry, I'm just looking at my own website because I can't keep track of all of these things.
I can't either. Terry has a magical brain where she reads something one time and it sticks. Like she's like my permanent little encyclopedia. But
okay, so this person applied for a card in August.
Okay.
They actually sent an email to the Citi MLA team with a copy of their orders. The annual fee posted and was refunded on the same day. They did have a balance on their account, but it wasn't, it was under 0.36. Yeah, I'm not sure about that one. Okay. Okay. I'll caveat it. If you have a Citi card.
I was gonna say that's the only time. Yeah.
Yeah. It's the only bank that does this, but if it's in the month where you're going to get charged the annual fee, so just set a reminder on your phone. Sometimes you need to have a small balance. It could be as like $100 or whatever. On your statement needs to close with $100 in order to get the MLA fee refunded. But that might not be true anymore. So your mileage may vary.
Okay.
But yeah, so I'll just show it. So like, I'm just trying to pull up like, so right now in Chase, like I still have, there's 778. That's on Vantage Score. But, and I was going to grab like my, all my my stack of cards, but I can't find them right now. But I got a whole binder full of cards. I still got like 30 cards from when I left active duty. So all that to say that opening a whole bunch of credit cards can actually be really good for your credit score. And if we think about, well, why is that? Well, payment history, I set up Autopay. Amounts owed, well, I actually have access to, hundreds of thousands of dollars of credit, but I'm not using all that credit. So that's actually boosted up. And then length of credit history. I've kept my oldest card open, right? So I think that's the moral of the story there, that like you can be in the military and open up a ton of cards, use all your annual fee waived military benefits, and you can still have a great credit score for when you go, to apply for a mortgage or an auto loan or whatever else you need.
So I have a quick question. Sorry.
Yeah.
When I first got into this, I grew up in a home where credit cards were bad. So it took me a good year or two. It took me till that first trip that I didn't actually pay for to be like, oh, yeah, this is real. But I would get so anxious about it, especially when we started opening up multiple cards. I would get almost obsessive. Like I had a routine every Friday. I logged in and any card that had a balance, paid off. And then I had read somewhere, it's actually better to like let your statement close with the balance so the banks see that you're actually using the credit. And I've always wondered like if that was true or not. So then I got into a routine where now on the 1st and the 15th I go in and I would pay. But I do like let cards close with a smaller balance now. And then immediately obviously paid off, or I don't even let it go to auto pay. Like that's how obsessive I get. I'm too scared that there will be a glitch in the system and it won't actually pay. So I pay it off the day I get hey, your statement has closed. But I've always just wondered if that was just a myth or not. Or is it
have you noticed any effect on your credit score? Because you've done it both ways.
Yeah, but I think that's one of those thing. Yes, but that was at the time where I was like, okay, this is real. So then like we were opening more cards. So I think it was a bunch of stuff. I think my score increased because now I was getting a greater like credit just profile all around. I was getting the mix. I had more credit available and I was paying them all off. Like, so I think it did go up, but I don't know if it was, because I started letting them close with a small balance or if it was all of it together. Does that make sense?
Yeah. But I mean, like when we're like, we're not talking about like 650 to 750 credit score range here, right? We're talking about like 750 to 850.
Yeah.
Right? Like it's kind of, yeah. So again, there's no, I
also have, I don't check my credit score often, like, cause
I
realized
you shouldn't.
That's once I realized, even like anything over, I think it was Taryn who had mentioned it a while ago, like walk in with a 740, walk in with a 780. They're not 800, 815. Like your interest is not, it doesn't matter. I don't check it as often. But there's times where mostly like around big spending times where my brain, I want to see all my accounts at zero. I want to see it like that. But then I'll get stuck in it, but I need to let it close with a little something on it. So I'm just curious, like, do you not?
I don't care.
Yeah.
So I've done it I've done it both ways.
Yeah.
So I used to be like you. I also came from a Dave Ramsey family.
Mm-hmm.
Credit cards were bad. Cut them up. I'm debt free. And when I first joined the military, I had a Chase Freedom card, and I was basically like, I would put everything on a Chase Freedom card. My paycheck would come in. I'd pay off the Chase Freedom card, and I'd have no money left over, and I'd have to put everything back on the Chase Freedom card, right?
Yeah.
And so I was living paycheck to paycheck. I got married. My wife said, "We're not doing that anymore." God bless her. Thank her for that. And we broke that paycheck to paycheck cycle. But the difference in my credit score from doing that method to, and I would log in every Friday like you, and I would pay off all my credit cards.
Mm-hmm.
And I would check, every American Express, Chase, Citi, Capital One, every single site, right? And make sure they're all 0, 0, 0, 0. I think there's, for some people, like there's a time and a place for that. And then I think eventually you can get to the place where, you just set up Autopay, and now I just get the emails every month, and it says, "Hey, this was your balance. Your Autopay is scheduled for this." I quickly skim through all the transactions, make sure there's nothing crazy, and then I just let the Autopay take over. Unless, like on American Express, you can hit like pay my balance, boom, 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 and it drops to zero instantly in front of you, and that's kind of satisfying. So
that's so satisfying. Yes, I wish Chase could do that. Yeah.
Yeah.
Okay. I was just curious.
I don't think it matters. And I think whatever like you're comfortable with. And I know for me, like I've had Autopay on my accounts now for years.
Yeah.
The computers have never glitched.
I know. And it's like a deep intrinsic, like,
yes,
trust
and
issue for me, I think. But
let's fear cast this, right? Okay. The Autopay misses, right? You're in Cancun and your cell phone broke, so you have no way to check. A week later, you come back to civilization and you're like, "Oh my God, the Autopay missed. I am late on a payment for the first time in my life."
Yeah.
What are you going to do?
Well, I'm going to call.
What are you going to do?
I'm going to call.
Yeah, you just call him. You call him and you say, "Hey, you'll never believe it, but I was in Cancun, my phone broke, and I had set up the Autopay, and the Autopay didn't work." And American Express, Chase, Capital One, all these customer service reps are going to say, "I'm so sorry to hear that. I can see that you had Autopay set up. Something went wrong. We're waiving that late fee, and we thank you for being a customer." Because remember, this is the relationship. You are a customer of them. They are providing you customer service. And what do they get from you? Billions and billions of dollars of transaction fees every year. And for the people who aren't using credit cards correctly, they're paying interest, right? Yeah. So for you as a person who pays on time, and has this track record of paying on time, don't worry. If the computers do, and now that's going to destroy your trust in Autopay forever.
Never.
But then what do? Just go back to your system, and maybe you don't log in every Friday. Maybe it's every other Friday, right? But just go back to your system, pay them off manually. But I'll tell you this, I have had Autopay set up on all my accounts for years now.
I know. I don't know what it is.
They've never failed. So.
Yeah. I don't know. One day maybe, but I still, the second I get that, your statement's closed, I get on, paid off. But
and why if you have the money sitting there, why not?
Yeah. I think the only time now that I do get is like for sure during PCS season when some of our cards have like a much larger balance than normal, I will bring that down at least to a more like I'll bring the balance down before the statement closes, because I don't want it closing with like a significant and maybe that is me being crazy neurotic also, because I get what you're saying. You're like, well, okay, Amy, that one time every 3 years that your utilization's higher than what is typically recommended. Okay, so you drop 3 points or 5 points, even 10 points. Like it's not gonna matter. It took me a while. I was for sure the person, like when you opened, who was like, they're upset, but that was 100% me when we first started. Because that's how I gauged whether or not my upbringing as a child of like credit cards are bad was right or not. And now I'm just like, my family is now being like, how are you traveling so much? What are you doing? I'm like, well, put Dave Ramsey down. I'll show you.
Yeah, exactly.
Okay. All right.
Yeah.
Tangent.
No, that's not, that's excellent. Thank you so much for sharing that. And I know that there's probably a lot of people watching this, probably a lot of people who are going to hear this later, that will say, yeah, like I get it. Right. And like, I was an optimizer, and I honestly, it was a trust thing, right? I thought the banks, the credit card companies were out to screw me. I thought that they were, as soon as they had the opportunity, boom, they were going to hit me with a late fee or hit me with some interest. And I didn't like the whole concept of like, you buy something in January, the statement closes in February, and you don't have to pay it off until until March. Like that to me is it's hard to wrap your head around, right? When you're trying to understand, wait, but my statement balance is this, but my total balance is this, but I already made a payment, like, and you can get into these cycles where, and you can see how people fall into these debt traps where they're like, they're just not paying attention close enough, and all of a sudden they're like, shoot, I put $5,000 in my credit card and I only make $3,000 a month.
I was just gonna add,
yeah, go ahead. No,
I was just going to add quickly that I did the same thing as you, Spencer. One time I swore I set up Autopay. It apparently didn't. I don't know. I immediately caught it because, I look at my things all the time or whatever. And Chase was super nice, and it had like a couple days of interest, and it had a late fee, and they waived both. So just for anyone listening, they reversed the interest and that. And then also, I am a person, I just set up Autopay and I don't look at it. So for people who like, I mean, we don't overspend at all. We spend what we have, and I don't feel like it's affected my score any differently. So when you say you don't care, I'm a person that I let the whole balance post, unless I have to cycle credit because Chase only approves, we're getting too close to the amount where we're like like our extended credit. So they only approve us for a card with 3,000 credit or limit, because we're kind of, that's a whole nother topic. But anyway, and so maybe if I have to cycle a little bit of credit because we're working on a sign-up bonus, but otherwise I let it close with the amount, and it might be high some months because I'm working on a bonus. And then, like you were saying, a couple points here and there, but overall, like the bigger picture, it's been totally fine.
Yeah.
So.
Yep. The other thing I wanted to just bring up here too. So I just checked my my credit score in this is in Capital One, and it's 808, right? Because they're using the FICO score 8, whereas Chase was using Vantage. So that's like almost a 31 point difference between the two scores. Again, it like you can gamify this all you want. You can try to optimize this all you want, but as long as you're batting above 740, 750, do not stress about this. Like, spend your time thinking about something else and just do the things that, first of all, are like responsible credit usage to begin with. And second of all, they're just going to lead to a good credit score. Like we've been harping on again and again, like there is no difference in the interest rate or in the benefits you receive from lenders if you walk in with a 750 or an 850 credit score. It's just there just is no difference, and it's not worth your time to try to manipulate the system, take on additional debt to like increase your credit score. That's just insane to me. Like if you're that much of an optimizer, let me redirect you to military travel hacking and optimizing points and miles, because that'll scratch that same itch, but will be much more lucrative. Because here's the thing, because I worked on getting when I was in my early 20s, I was like, I'm gonna get a perfect credit score. You get nothing for that. You get literally, they don't even send you like a medal or like a gold star or anything. So I can't recommend it enough to just like do the action steps that lead to, set up Autopay, with a statement closed, paid in full, pay it before. I try it both ways. Honestly, if you're an optimizer, sure, like go for it. I could think of a million other ways to spend my time. And the other thing too is it's very hard to tease out what is actually affecting the credit score. In terms of like if you're applying for new credit, if your credit is getting older, if your utilization is up and down, if it's sometimes it's really hard to tease out what is actually impacting your credit score. Like sometimes Chase will email me and be like, your credit score dropped 40 points, and I'm like, I have no idea why. Like nothing changed. I didn't apply for any new credit. And then the month later it'll be like, your credit score's back up 40 points. I'm like, great, thanks. No idea why that happened. And I don't care. I'm moving on with my life. I just want to point out to your Facebook group and to anybody else who's watching this or listening to this, but a couple tools, annualcreditreport.com. So you can get a weekly credit report. So this is just like a 100-page PDF of all the information that the credit bureaus have on you. So Equifax, Experian, and TransUnion are the big three in the United States. And since COVID, you've been able to pull this weekly. Before COVID, it was annually. I recommend you still just do it kind of annually. Like set a reminder on your phone, maybe around a birthday or if there's like, a quieter season of the year, January, end of January or something. Just set a reminder on your phone. Hey, go check all 3 credit bureaus. And what you're looking for here is just the information makes sense, right? So if you see addresses in there that you've never lived at, which being in the military can really sneak in if you ever get mail sent, to like a friend or a family member's place. And then you can go back to the credit bureaus and you can dispute things. So I've had, addresses removed, phone numbers removed, email addresses removed, names that, people have snuck in there, not maliciously, but just like, with the same first and last name as me, but a different middle name, and said like, no, that's not a name I've ever been known by. If you've ever been, when you get married and you change your name, there might be some like maiden name and married name shenanigans going on in there. So just log in there, just make sure all the information makes sense, make sure all the credit lines make sense. And, and then that's really that's one of your first line of defenses against identity theft. If you log in there and you see, like Bank of Kansas checking account, you're like, I have never had a Bank of Kansas checking account. And you see like an address in, Minnesota, and you're like, I have never been in the state of Minnesota or know anybody there. That's your opportunity to start disputing that. And maybe even put an active duty fraud alert on your account. Now, I will caveat that if you're doing military travel hacking, I do not recommend active duty fraud alerts. I put one of these on my all 3 credit bureaus when I was stationed overseas. And every time I applied for a credit card, the credit card company had to call me and verify that it was me applying for the credit card, except that the office that would call me was only open from 9 in the morning to 5 at night, and I was in the Middle East, and so the time zones never lined up. It was always a pain in the butt. So if you don't have a high identity theft risk, I don't recommend the active duty fraud alerts. If you do have a high identity theft risk and you're not doing military travel hacking, the active duty fraud alerts are excellent. They will lock your credit down. Nobody's going to be able to open an account in your name, including you. So they are very good. If you're not doing military travel hacking, sure, go for it. But one thing I will recommend is you can freeze your credit at Equifax, Experian, and TransUnion. And you can, if you're going to apply for a card, you can set a thaw. So let's say Sunday, you're like, I'm going to apply for the City Strata Elite, or what's the new one? Bank of America Atmos Summit card tomorrow. So you can log into all 3 bureaus and say, they have apps too, so it's super easy. You can also call them. I had to call one the other day because I was overseas, and it actually was surprisingly easy to put a thaw in place. And so you say look, from Monday to Friday, I'm going to have a credit thaw in place. And then when Monday rolls around, After midnight on Monday, you can log in, apply for the credit card. It will check your credit report, and then come Friday, your credit report will freeze again. And then if somebody tries to apply for credit, it'll say, hey, you can't because it's locked, it's frozen. So I do highly recommend those. They're very easy to freeze and to thaw. And I like the scheduled thaw because you can just kind of like set a time period, like, hey, have it thawed in this week, but then at the end of the week, it goes back to frozen again. And then you don't have to worry about logging in and refreezing it. But with the apps, you can actually, like, a lot of the apps, you can just click like thaw, and then it's like, okay, your credit score or credit report is unfrozen. You apply for the card, and you get approved, and then you log back into the app. 10 minutes later, you hit freeze again, and then it's frozen again. So, I do highly recommend freezing your credit for the identity theft and fraud prevention. Let's see. Other than that, I think that's all I have to say about credit scores. This is probably the most I've ever talked about credit scores because I tend to think that they are. It's like hand washing. You just wash your hands. Like, use the bathroom, you wash your hands before you eat dinner. You wash your hands. You just wash your hands. It's not like something you should have to explain more than once to people. But for credit scores, like, people like to get all excited about them, and I just don't. Other than like the things that are actually in your control and actually in your power. I just don't really. I think there's so many more interesting things that you can do once you have, Autopay set up, once you're keeping your oldest card open. If you take care of those basic things, then cool. Like, now you have this tool called a good credit score. Let's go use it to open up 5 Amex Platinum cards, a couple Chase Sapphire Reserves. Oh, and 5 for your spouse, Chase Sapphire Reserve for your spouse. You could send them a referral link so that now you're getting the referral bonus, they're getting the welcome bonus. And let's start stacking this up. And before you know it, you're staying at Hilton with Diamond status and Marriott with Platinum status. And you got, tons of annual free nights, lots of points to book flights, and, more Lululemon than you know what to do with. So
We like our Lulu.
yeah. So, and the Aura ring. You can't forget the Aura ring.
Yeah.
So, yeah. But yeah, that's credit scores. Any questions from the crowd?
That's awesome. Thank you so much. I definitely will just echo that. I feel like where we see people in our group, it's either someone who's building credit for the very first time or kind of like starting over in some capacity, or it's the people who have they have the platinum and they're ready to maybe get another one. But it's that jump to the the multiple cards where it's that voice in the back of your head of the boogeyman of, oh, your credit score. Like, that's where I feel like it's that audience of the building the credit, or the I think I believe you, but I'm a little nervous, or like my spouse is a little nervous that I now want to get a card in my own name. Like, that's where, would you agree, Taryn? Like, that's where.
Well, I mean, we have like varying levels of people, and they're like, I am a hardcore every 2 to 3 months, if not sooner, I'm getting a new card. I mean, I think I opened 9 cards last year in my name. And then my husband also opened, I think, 8. So people are like, there's just no way that your credit score can still be good. And I think so there's just people who are like, until they can start doing it and see, wow, I opened 1 and I didn't have that big of a difference. And now I opened 2, and yeah, you're right, maybe a couple points.
Yeah. That's when I stopped obsessively caring about what my credit score is when I did open multiple cards, and I had a better score than when I started, that I was like, oh, okay. Then I stopped caring as much.
Yeah, there's a lot of people who are like, the score has to be perfect so I can get the best interest rate when I get my next car. And we're like you keep saying, there is no club for even over 800 scored. Like, it doesn't matter.
Yeah.
It just doesn't matter. Yeah.
If anybody does have questions, you can leave them in the comments here, but we do have a list I was going to ask of just some. Can you talk about the difference? This says specifically FICO and Vantage score. I feel like I've heard in the past, oh, if you're getting a car, they look more at this. If you're getting a home loan, they look more at this one. I have no clue if any of that's accurate or not.
I think it is accurate. The different lenders look at different scores. I would just say whatever, what is it? Credit Karma, Credit Sesame, like whatever they tell you, just minus 30. And that's gonna be the one that like every time I've applied for a mortgage, I'm like, I have an 800 credit score. And then they're like, no, you don't. You have a 770. I'm like, okay, does that change my rate at all? They're like, no. I'm like, okay, then I don't care.
Yeah.
So same thing with mortgage, auto loans that I've taken out before. It just always seems like some of the like free scores are like more generous. They're like, oh no, you're doing great. You got an 800 credit score. And then you go like talk to the real lender and like, no, you suck. You opened up 20 credit cards in the last year. I'm like, yeah, because they're free. And I'm getting like thousands of dollars of perks in them. So I don't know, like maybe I'm the smart one here. Yeah, sure. I mean, there's differences. Again, like we could sit here and try to like, read the Talmud and try to, discern the different, like, okay, this one's, got more weight on this one's got more weight on that. I would just say like whatever the free scores are showing you, just mentally subtract 20 or 30 if you go to apply for a mortgage. So that does matter that if you're like right at that borderline, if you're like at a 750, and you go to apply for a mortgage and they're like, actually you're closer to like a 700, 720. And so that's going to be a slightly higher rate. Again, you like have very little control over that number other than the things we already talked about, right? Autopay, keep your oldest credit line open, maybe having a little bit close on your statement. But definitely don't, one of the questions that's going to come up, or I'll just skip to it now, do not carry a small balance. Do not carry a small balance. Do not pay a dime in interest. It does not help your credit score. And even if it does, I don't care. There's no you don't get magic credit score points or money. You get like you're paying. You know what it's going to happen. If it hasn't already happened, is there are going to be companies out there that are going to say, pay me $100 a month subscription and I'll get you an 800 plus credit score. And I guarantee you they'll sell 1 million subscriptions. People would just eat it up. They would just love to get an 800 plus credit score. And even though it means absolutely nothing, so do not carry a small balance. Pay either let the statement close and then pay it in full, or pay it in full before it even closes. I don't think it matters that much. But do not carry a balance over to the next month and pay interest charges or have a late fee or anything. And do not make your minimum payments. Pay your balance in full, your statement balance in full. Minimum payments, again, are another trap. And I'm glad that unlike most of the credit card statements now, it says like, hey, if you make the minimum payments, you'll pay off this balance in like 400 years or whatever. Like your great grandchildren will still be paying this off. You can't inherit debts in the United States, at least, so you don't have to worry about that. But I think it's pretty savage if you just make the minimum payments. You don't want to do that. FICO versus Vantage score. I think FICO is the more accurate one. But whatever score you're looking at, just subtract 20 to 30 points mentally. And that's probably what a lender is going to show you when you go to apply for an auto loan, a mortgage, or anything else that like it really matters. Credit cards, like I don't know if you already have an Amex card open, they hardly ever check your credit.
Yeah.
Mm-hmm.
You got more questions on the FAQ list there?
I was going to add one thing. This is a little tedious, but I love business cards. If you're really like getting into this, like obviously we talk about the cards where the fees are waived and this and that, and you get all the free perks. But if you want to like be strategic about the whole travel hacking too, you have to play with those as well. And the nice thing about it is business cards do not report on your credit report. And so if you have like a big expense coming up, like use those things to your advantage too, because if you have something coming up and you don't want a huge ding where it says that you just had a 15K statement close or whatever, you could easily use that to, just a thought, like, or just putting that out there to anyone who might be listening, because we do talk about them a lot on our page, and to really like strategically get to be able to get more cards and things like that, and they don't show up on your personal credit report, and so they can be very strategic too if you have something big coming up, or
Yep. Yeah. I love business credit cards. Another thing that, you get, so like my wife was an immigrant to the United States. She came in under a fiance visa, and then we got her a residency green card. And she came to the United States and, as an adult, and had no social security number, no credit history. So the easiest things to do there is, number one, if you're married, an active duty service member who has a social security number and has credit, just add him or her as an authorized user to your account. So that'll start reporting immediately. It's especially advantageous if you have like a very old credit line. You can add them to that credit line. Now all of a sudden their credit history is backdated, to ancient times, 10 or 15 years, 20 years, depending on how old your oldest credit line is open. You can add, and that actually gets to another point, is you can add your kids to your credit card. So all the, I'll look it up later and send you the link, but all the credit card companies have rules about how old the kid has to be before you can add them to your credit card. But some of them are as young as like 0.
Oh, really?
Chase just let me add my son, who's when I added him when he was 6, and I was
really?
like, yeah, because they had a bonus for an authorized user, so I was like, let me try it, and then it let me add my 6-year-old. So I was like, American Express is definitely 13, but I just was trying out Chase and it worked.
Interesting.
Oh yeah. Here, I'll share this this image here. Let's see if I can get this pulled up. Yep, here we go. So American Express is 13, Bank of America, Citi, Capital One, Chase has no minimum age requirement. Discover's 15, Wells Fargo, don't ever use Wells Fargo. And US Bank is 16. So, yeah, I mean, if you got Chase Sapphire Reserve, throw them on, authorized user. And if you got business credit cards, man, add some little employees, add some authorized users if you're going to get bonuses. So now your job as a parent is you must make your payments on time, because you can tank your kid's credit score before they even have a chance to do anything about it. So what a great way to cause generational financial harm than to have your child go into the world with a bad credit score because of your poor credit behavior. So do not do that. But what a amazing gift to give your child when they, graduate high school or graduate university, and they go off on their own, and they go to open up. They say, Mom, Dad, I want to open up a credit card, and you're like, which one do you want? Because the world's your oyster when it comes to opening up credit cards when you have a good credit score. So, yeah, I think adding kids to your credit cards can be a great way to help them build their credit score early. And if you now, let's say that you've been added, like, let's say again, you're an immigrant to the United States, you get your social security number, and you have been added as an authorized user on your husband or wife's account. And let's say that you want to build credit for yourself in addition. So Navy Federal, USAA, PenFed, all the military-friendly banks have what are called secured credit cards, where essentially you put $200, $300, $500 into an account. That becomes the collateral, and then you get a credit card that has a maximum balance of that same amount. So $200, $300, $500. And just put a couple of expenses on there, gas and groceries throughout the month. Make sure you pay it off in full. It doesn't matter if the statement closes, 0 balance or whatever, just, make a transaction, pay it off, keep doing that. the bank will start reporting to the credit bureaus, Experian, TransUnion, Equifax. And before you know it, you'll have, a 650, 700 credit score. Give it a couple more months, let your account age. After a year, probably 700, 720. And after 2 years, you'll be right up there, 750, 800. And you'll be able to go for all the Monster, Chase Sapphire Reserve, MX Platinums, MX Gold, all the really good cards. So it could be a little bit longer of a journey, but I think it's a really good way to add to the bottom line of a military family, is to have someone in the family who's interested in credit cards.
Awesome.
Let me just check that list you sent me there, see if there's anything else that we didn't cover.
Really don't.
What habits matter more than people think? Which ones matter less? I think again, it's just Autopay. I keep hammering it. Just these like 5 things that you can act. And really, it's only just keep your oldest card open, keep your credit utilization down, and pay your bills on time. That's it. And just time, I think the things that, which ones matter less, I would say opening up multiple cards. People think that is a way to kill your credit score. But if you, like where on here, other than, okay, so new credit, sure. But like after you wait a year or two, that's no longer new credit. So where on here does it say opening up multiple credit cards is bad for your credit score? Nowhere, right? In fact, it can increase your credit score because you can have access to more credit, but be utilizing less of it. And yeah, so other than, a slight dip for new credit. And the other thing that people freak out about too is, okay, when I leave the military, I have all these annual fee waived cards. What's going to happen? And my advice for them is always wait until you're actually charged the annual fee, then assess, do I want to downgrade this card? Do I want to close this card? Or do I want to keep this card, right? Like that could be an option too. And so for example, like I still have 6 annual fee waived Amex Platinum cards. I left active duty almost 4 years ago, and Amex has charged me annual fees on some of my cards. And I've just kind of gone through the assessment and said, look, I probably don't need 5 Hilton Honors Aspire cards if I'm getting charged annual fees on all of them. So I'll close 4 of them and I'll keep 1 of them open. And we've done the kind of the same assessment for my wife as well, where she's like, look, I like diamond status, but I don't need to be paying annual fees across multiple Hilton Honors Aspire cards. So yeah, that's oh, and one thing we did was when we left active duty, she had like 20 cards open. We immediately just closed like 10 of them. Her credit score dropped 40 points, and 6 months later, it was right back where it started. So like for everybody who's like freaking out about like, oh, I don't want to close a credit card. We did exactly what everybody gets scared about. We closed 10 cards like within a week of each other. The credit score dropped 40 points. So like, what was it? Like 810 down to like 770, and then went right back up to 810. So it's such a small, it's once you have a really good credit score, you have to like actively sabotage it, to get it to drop significantly.
I was just going to touch really quick when you were talking about the amounts owed and how opening up more can like be better for your credit score. And I see that all the time in our group too. People will be like, well, I have my one card, whatever it might be. And they're like, and I put all my expenses on my one card. Well, that one card, your credit limit might be, I don't know, 10, 15K or something. Well, when you do have an expensive month, you have to buy a couch and this and that or whatever. And now you're at 8K of your 10K limit. Right. You're tanking your credit score. But if you were doing that and you had 10, 20 cards open, like you're not going to see that change as much because you have so much available credit, like you said. But that's what I try to like get into people's heads, that it's good for your credit to have more, because now it's not going to hit you as badly when you're putting so much on just one credit card. Yeah, that's a really good point. So
I have a quick question that goes kind of along those lines. Can you hear me?
Yep.
Yeah.
Okay. So I had no idea that carrying a smaller balance was a good thing for a credit card. So that's good to know. I am glad to know that now. But one of my questions is like, if I have a lower cap on a credit card, and let's say my cap is like $4,000 or $5,000, and I spend $5,000 before the end of the statement, and I pay that off, and then can I spend even more? Like, will that hurt my credit if I spend even more over that 5,000, but I've already paid it off? Does that make sense? That was kind of a
No, I got it.
Okay.
So my most credit cards only report once a month. So you could spend $5,000, pay off $5,000, spend $5,000, pay off $5,000, spend $5,000, like do that like 4 times in a month, like over 4 weeks. And as long as the statement closes, I mean, if the statement closed with like $500, let's say, and you had a $5,000 limit, that would show 10% credit utilization. So in that case, you could cycle like that.
Okay.
And I wouldn't usually recommend that, but it shouldn't. As far as I know, and correct me if I'm wrong, military traveler folks, but as far as I know, most credit cards only report once a month.
Yeah, usually they like say don't cycle like on all your, but only cycle during a sign up bonus period is what what other people would say too. Is like if they give you a low credit limit, but you're trying to meet your sub minimum spend, then it's okay, but don't like make a habit of it.
Got it.
Yeah. But yeah, good question. Cool. I'll just take a look at the
As I say, I'm gonna have to. I hear my
Those
baby.
questions. I mean,
okay.
you hit in your presentation, so
Great.
I just wanted to say
Okay.
thank you before, because I have to head out because I can hear the baby. But amazing. I can't wait. Every time someone asks this question, I'm gonna take this link and be like, please listen to this, because I feel like you help reiterate the things that we are.
Yeah. I'm sure this is nothing that you all the mods of the group haven't said before, but sometimes it just helps coming as an outside voice. So
yes, exactly. Hearing it from a different perspective and stuff, I think absolutely. So, but yes, I want to say thank you. I got to run, but thank you.
thank you so much.
You're welcome.